So, here's why Bitcoin is back below the $100,000 price point. Just yesterday, the crypto market was in the green. Crypto bros were most likely hitting up their favorite car dealership for their next Lambo. But fast forward to today, that Lambo is looking just maybe a little bit far away because the crypto market is back in the red and Bitcoin is back below the $100,000 price point. What gives? Well, the recent price decline appears tied to US economic data. Specifically, on Tuesday, the US Bureau of Labor released the November 2024 jobs report, showing that there were more job openings than economists had anticipated within the month. What does this have to do with Bitcoin? See, beyond the price charts and the squiggly lines, Bitcoin is most sensitive to one thing, that is global liquidity, aka cash in circulation. Why? The more cash there is in circulation, the more people have to invest in speculative assets like Bitcoin. Again, what does this liquidity now have to do with the jobs report? We'll get to that in a second. It is worth noting that this liquidity is controlled by central banks using several tools. The primary one being interest rates, which is the money paid on loans taken from the bank. Think of a tap that they can regulate when they want, usually to curb things like inflation, as too much liquidity, aka too much money chasing few goods, leads to prices soaring. Kind of takes us back to our basic economics class. So, central bank raises interest rate, liquidity tap tightens, Bitcoin sad. Central bank reduces interest rate, liquidity tap opens, Bitcoin happy. Lately, the Federal Reserve, which is the US central bank, has been gradually opening this liquidity tap as it feels inflation is coming down in the US. And in September 2024, it was projected to further reduce rates, aka open this liquidity tap 4 more times in 2025. Crypto happy. Sometime in December, however, the Fed decided that, you know what, inflation is not going down as we would like. So forget about opening that tap 4 times in 2025. We're going to only do 2 cuts. You guessed it. Bitcoin not happy. At the time, it dropped from highs around the $106,000 price point to about $91,000. So, what does all of this have to do with the recent job report? Remember, better than expected numbers in November 2024. Well, there are a few things that could pressure the Fed to open that sweet liquidity tap even faster. One is if the economy starts suffering. But if there are significantly more job openings, it means the Fed, can hold its position for longer and be like, you know what, the economy is doing fine. We do not need to pump in more liquidity or pump in liquidity at a faster rate. So that means less liquidity expectations for Bitcoin, price, as you guessed it, nosedives, which is what we had happen today. That said, it is worth noting that Bitcoin's recent decline may very well be a knee-jerk reaction, because in the long run, the current economic trajectory still points to more liquidity going forward. If you enjoy explainers like this, please leave a like, comment, and follow for more.